Silver Dave here. I finished building my Platinum predictor and I've actually improved on the prediction outputs. And let's find out, what's happening in Platinum, because I know a lot of you have been looking to buy Platinum and add it to your stack in addition to gold and silver. So let's see what's happening to Platinum. Let's find out. A lot of you are interested in Platinum. I've seen a lot of my viewers and subscribers, and when I go to their channels and I look at chats, people are saying, oh yeah, right now, I'm thinking of adding not just silver, but adding a little bit of gold and platinum and everything else. And, there's not a lot of material out there related to platinum. There's a lot of material related to silver. There's people saying, oh, silver is going to go into this, go into that. And there's a lot of material related to gold, which is held by central banks. It's the oldest known currency in the world. It's survived, I think, 6,000 years, and so on. But in terms of for platinum, there really isn't so much information. Sorry, my alarm just went off. I don't know if that's recorded, but anyways, for platinum, there's not much information out there, right? So I decided to explore platinum, to see what is the platinum market like? How does platinum's price evolve over the long term, short term, midterm? And one of the things I did, like in my previous predictors, I only did basically the average predicted price based upon machine learning models. And the machine learning model is called gradient boosting. If you want to look at what's gradient boosting, you can Google it and you'll see different articles and the type of applications for gradient boosting, which works pretty well for stock market predictions, usually slightly better than neural networks and a little bit faster for most general purpose business applications. But basically, I decided to use those techniques on the platinum market, and I decided to look pretty much at the same things, basically all the metal commodities, that is platinum, silver, gold, palladium, and then commodity markets such as oil, soybeans, then also the stock markets such as the S&P 500, the Russell 2000, European markets, foreign currencies such as the Swiss franc, the Japanese yen, I think, and then also the dollar index, the VIX index, and emerging markets such as the emerging markets index, and then also the Hang Seng. The Nikkei is not the emerging market, but that's the Japanese market, which I also do track. And what I found was, that platinum is not very volatile. That's what I have to say about platinum. Basically, the midterm volatility. So the way you see that there's a black line. This black line is the predicted price of platinum over the course of 3 days, 7 days, 14 days, 21 days, and 112 days. The green line is the short-term errors, right? This is the band for short-term errors. When it breaks this band, it means that that the price is behaving pretty volatile. The volatility has increased, and what we're seeing is it's diverging from past behavior. So what does that mean? That means that if we are in a crash, you would see that the short-term price band would suddenly expand and explode. So, and the long-term price bands will actually stay relatively stable, because these are the long-term price bands, and actually you have crossovers. And I don't know of examples of crossovers, but for example, in September, right, when they announced that they would, no, this is July, when the Federal Reserve came in to step in to say we would do QE, you can see that the short-term, basically, volatility just goes off the charts, because all of a sudden you have price spike and increases. So the short-term volatility increases. It breaks the historical volatility barriers, And then you can see that it picks up a lot of momentum and it goes on a sort of a upward trajectory. And then there is a slight correction and it returns to normal. I think you can see on this chart too, you have the crossover at this point, the 21 days, the 14 days, and so on. But overall, platinum it doesn't see a lot of volatility. It doesn't see a lot of breakouts, like they say, where it breaks basically the historical volatilities from its valuation. And it breaks historical price patterns. This is not the case with something like Bitcoin. I also did this for multiple assets. If I do platinum and I show you the platinum basically prediction and the historical prices and the predicted prices, you'll be like, oh, it's kind of boring. It has these bands and it pretty much just sticks within these bands. And the reason for it, I think, is because platinum is mainly, it's kind of like a forgotten asset. People don't speculate on platinum. It's pushed up by, it grows slowly upwards, like it trends slightly upwards over time because of increasing industrial demand, and it just follows, the growth of the overall economy. To a certain degree, it's not like a one-to-one tracker. Don't take everything I say as financial advice. I'm not a financial advisor. I just put some pure program over it. I have no way of verifying whether it's true or not. Don't make your trades based on what I say. But from what I see, based upon the output and what I'm reading and how I'm doing the measurements, it looks like, platinum is it's pretty much just industrial. There's really not so much speculation in the market and people aren't actively trading. And the volumes for platinum, I think, are much less than gold, Bitcoin, cryptocurrency. It's just less volatile. But it does have some interesting price evolution. So one of the interesting price evolutions is, I believe in November, there was news out that there's a platinum shortage. So what you saw was a jump and increase in price. Platinum was testing the lower barriers, but it was in trend with the overall prediction. And when it tested the lower barriers, when the news came out, all of a sudden it started testing the upper bounds of the volatility range. And when it goes right now, it's kind of having a breakout pattern that, I see in the past when the Fed stepped in. And this could be simply because, people have expected demand. They're trying to price in future demand for platinum. They're trying to price in hydrogen demand. Hydrogen fuel cells use platinum. And if there's a shortage, and they're saying that right now the better catalyst is silver mixed with platinum, before they were saying silver mixed with palladium, people are thinking, how do we price that in? So this part is kind of assessing that. And I think, people are trying to price it in, but it's difficult because right now there is also the economies for multiple countries are down the drain. So how much real demand will there be? You don't really know. I think we'll see in the future. But there's some upward pressure for platinum. At least this is what it says on the graphs, and from the data I've gathered, there seems to be some upward pressure on platinum. Remember, I'm not a financial advisor. Don't take my financial advice. I can't guarantee any of these. If you lose money, it's your own business, and use your own judgment, do your own research. If you don't know, go talk to a real financial advisor, ask them what they think. Now I'm saying that this platinum asset is not very volatile, and if I was to compare it to something that was really volatile, I would go into Bitcoin. And you're like, Bitcoin's volatile? Yeah, look at this. So pretty much Bitcoin has been on a roll, right? In March, we had the crash of everything, and Bitcoin was kind of in the 10,000. It was like sub 10,000, right? And then when the Federal Reserve came in and said they will print all the money in the world, you had a breakout, and Bitcoin it didn't change. It was like, boom, okay, let's go crazy. We're going to have a breakout. We're going up. And then it tested consistently the upper volatility bands of the predictor. Because even if you look at Bitcoin historically in the past, at least over the last few months, it's been, not the few months, but the last few years, it's been pretty much trading within a volatility band range. And it was not so, it was volatile compared to certain other things, but it was not crazy volatile. It was not insane volatility that I'm seeing today. Because today, the volatility of Bitcoin is through the roof. I mean, the probability of you, for example, a lot of people have this, they feel they missed out on Bitcoin, right? They're like, oh, it was 10,000, now it's like 20 for something thousand. But actually, if you look at how, if you do the math and you're like, okay, Bitcoin was this volatile in the past, maybe you could feel bad about missing this one, right? This growth to like 12,000. That was like within sort of knowable ranges of volatility. If you're doing like some sort of analysis and you're doing stats, you're like, okay, the math was correct and that's possible. But missing this one is, this is like, if you do the math behind it, the probability of you actually catching the wave, is the same as getting struck with lightning. That's pretty much what it's telling me. And because pretty much at this range, right, if you've been tracking Bitcoin for roughly 4 months, 8 months, the ability for you to predict this wave is it's less than, what is it? Less than 84%. So basically that was very impossible that you'll predict it will be above this. The fact that it was in this range, this distance is probably, so above here is roughly 90%. Like the probability of it breaching this point is 90%. Like not this blue, but imagine there's another imaginary point above here that's double the size, is close to 96%. Then breaching even higher is 97%. This is closer to like less than 0.1% chance of it actually hitting that price point if you were looking at Bitcoin when it was back here. So yeah, you should not feel bad at all. I think you should just be like, okay, I just missed it, and there's other opportunity. Right now, Bitcoin is flying so high that it's actually risky to enter Bitcoin. I would not advise anybody. This is not financial advice. Don't trade upon it. Don't come to me and say like, oh yeah, I missed the boat on shit. This is not financial advice. It's just that for me personally, if I was to buy Bitcoin, I do buy cryptocurrency, I feel that it is risky. There's a high level of risk. What I would be looking for me, don't do this for you. For me, what I would do personally is I would look and see if there's confirmation. That means it goes back to a normal volatility band range. There's not too much volatility. And then I will look and see whether it has upward momentum and increased volatility for an upward momentum. And I'll also look at what's the overall macroeconomic environment, right? If there's going to be continued money printing, continued instability. And I would have to also look to see how Bitcoin's mining situation is. Because if you don't understand, everybody's like hyped about Bitcoin because of the price, but Bitcoin is facing technical challenges, right? It's having problems in scaling. And the Bitcoin scaling problem could lead to a Bitcoin crisis, and it could completely just wipe it out. Because what's happening right now is, there is a limit on the block size of the transactions. And miners want to make it sure, miners want to increase the block size so that they can take more fees, but the developers don't want all of the miners to have control over the fees because they want to be decentralized. So if you have a very large miner, a very large block, he's got a lot of compute power, he can actually reduce his fees and people would just go towards him rather. So then you have a centralized cryptocurrency, a de facto centralized cryptocurrency. And the developers of Bitcoin do not want that. But so they're proposing something called SegWit, segregated witness. So they validate the blocks. They say that, like, for example, for a block to become valid, there has to be, instead of having like all the nodes verifying the blocks as being valid, they could have, like, for example, they could split like the validation in different regions, and people within certain regions can validate it and so on. It's basically segregating the blocks and then validating them. And then finally, once they're segregated, we think they are like 99% valid. And then we like put it back together and then validate it at 100%. But there's very low risk in doing this segregation because it's 99% for sure. But the miners don't like that because it actually doesn't benefit them. So some of them actually turn off segregated witness. This is the thing. This is a war behind cryptocurrencies. Nobody talks about it. All the financial institutions, they don't understand cryptocurrencies. They're just like, it's going to the moon. It's going back, everything. But yeah, this is the challenge that Bitcoin faces. If you understand that there is a potential crisis for the way Bitcoin is transacted, and Bitcoin could potentially either face a limitation in terms of its transaction speed, versus also the fact that, Bitcoin could also potentially become more centralized, you wouldn't buy at this valuation. Like, from a fundamental perspective, you're like, yeah, the promise is not there. The promise of having decentralized currency is not there. There's a risk on it. So why is it so high, And relative to already existing decentralized currencies, such as gold, which is completely decentralized, nobody can print gold. No government owns it. It's 10x. It's priced at 10x that price. So you have to think about that. And relative to gold, it's very expensive, at least today. So going back to platinum, compared to other markets, platinum very flat, not very like volatile. So if you're really risk adverse, like me, I'll buy some. I think I'll buy some more in January. In my next paycheck, I'll buy another ounce. It's not so expensive, and the exchange rate for me is pretty favorable. So yeah, there is quite a bit of a premium on platinum. It's around 15%. So it's almost the same as silver, but there is less platinum in the market. Also, you have to realize that platinum is much less liquid. The spread on platinum is bigger. It's not the same as a rhodium or a palladium, but it is bigger, and people don't like holding platinum because there's just such a short supply of it. And there's a few industrial uses, but it's, if the energy sector changes, then the price just goes down the drain, like it happened in the 2000s, when they moved out diesel engines. So people are a bit wary of platinum, but the market isn't really volatile at all. And then pretty much right now, I think we're just in a flat bottom, because I see the volatility bands, they're not crossing. The short-term volatility is not above basically the long-term volatility. And yeah, so that's it for today. I'll share these predictors. I'll up these are my latest machine learning predictors. So I'll update these, and you feel free to do whatever you want with them. Don't trade based upon information you see here. Do not use this. There's no guarantee on what they say. There's no guarantee on what they will do. And you have to do your own research. And if you want to be sure about things, go ask your licensed financial advisor. He will give you advice, not me. Thank you very much for watching. This is Dave. Dave out.